All right, we're going to get started. Phase 4 deep dive. Everybody can see my screen. It's the live screen on there. We're going to talk about phase 4. Phase 4, following your phase 3, we'll be going back to trading the same time frame as you did phase 2, phase 3. So you want to remember that. This is going to be your third time through. If you're really, really smart and you can remember stuff, you'll remember it. I think I've been through the year 2023 and 2024 probably with 4 instruments through that. So, multiple times. And I think I could trade it again. I still wouldn't know what's going on. So I guess my lack of catching on. The only thing I caught was in December of 2024. It gets pretty bad after the first couple weeks. But with that, phase 4, we're going into this. This is now where you can start working on the trade management technique. So phase 1, 2, 3 was highly recommended. You don't focus on the money. You trade the minimum contract size. It's not about the money. It's all about the technique and proving that your technique and the rules that you found in phase 1 are working. Maybe do a little fine tuning through phase 2, phase 3, nothing drastic, and you come out and your phase 3 results are showing good potential, and so now you're wanting to go in and we're going to work on phase 4, which is trade management. And the reason I put trade management at the end is really wanted the focus to be on the technique. Didn't want the focus to be on the money, because the money, when you focus on the money too much, it distracts from the technique. You start changing things too much. You start making big adjustments. You're not focused on, win rates. You're focused on profit, and that's it. And as long as you're focused on profits alone, you're going to be stumbling. That's the way this business is. If you're chasing the money will elude you. You will go up and down, up and down, up and down. I'm only can attest to this by my own experience. I spent 2 years chasing the money, and for 2 years, I had great days and bad days, good months and bad months. Never really got anywhere. So I want phase 4 to kind of be very technical. You want to start going through it and finding a rule to apply to help you make money. So with that, you're going to take your starting budget, whatever you feel that's going to be. Mine was $20,000, and I'm going to trade 1-2% on my phase 4. And so what you're looking on the screen is my back testing, not my real trading, my back testing through phase 4. This is 4 instruments: MYM, MES, MGC, and MBT. All traded through. This is what real trading looks like. I point this out all the time. You don't make $1,000 a month. You make $1,000 one month, $2,000 another, minus 53. This is a business, not a paycheck. So if you think, oh, I'm going to make $100 a day or $500 a week or $1,000 a month, you're setting yourself up for failure, because it's not a paycheck. It's a business. And when business is good, you make money. And when business is slow, you make less. So the first part of this basically phase 4 is broken down into 2 parts: risk management and increasing your potential for profit. I want to focus on risk management. Risk management is absolutely the key. to being successful in trading. Keeping your capital, keeping your money, making it so you can trade tomorrow. It's trading 1 to 2% of your account size, but not giving the market 1 to 2%. It's knowing how to get a trade to break even quicker without getting knocked out early. So it's a tough one. This is I feel like trade management and risk management was probably tougher for me to learn than how to get into a trade. Getting into a trade and finding my rules to get into a trade had a lot of variables, but I figured that out. It wasn't as hard as how do I get to break even without getting bumped out and allow my winners to run. So that it's a very difficult little thing. I will show some things that I do, but you really got to figure your own out. Everybody trades differently. Everybody sees it differently. Everybody is going to think about it differently. But what do I mean by risk management? This average win loss. So if you're in TradeZilla, you have your average win loss. This ties with this, your trade win percentage. If your risk management, so if I have a $20,000 budget and I have a 1%, like that's 1 to 2%, so that's $200 to $400 of risk. I want this number below 1%. And this will become clearer in the long run. To get this below 1%, I want to start a trade with 1%, but I don't want to give the market 1%. I hope that makes sense. I'm okay losing 1%. Let's say I get in and it just does a fast candle back and knocks me out. I'm okay with that. As long as the trade's per my rules. I'm okay with that. But do I really want to give that? If I've got 4 candles moving in my direction, do I want to just sit there and hang back and say, okay, come take my 1%, my 2%? No, I want to reduce that. I want to bring that, and I want to get up to break even. Once I'm at break even, and this is my thinking, once I get to break even, now I can breathe. I can see, let the trade mature a little bit and get a little more comfortable and let that trade mature if it's going to mature. But till I get to break even, I assume I'm wrong. I assume that this trade's going to turn against me and I'm wrong. Now I don't want to just grab profit and I don't want to give it I don't want to lose that opportunity for it to take off. I want it to go. But I don't want to give it 1%. I want it to be below. By doing this whole 2 years of back testing, all I really did was focus on this, and I did have a method for scaling in and scaling out when the opportunity applied. But seriously, 1 to 2%, and I have a hard time with 2%, honestly. That's $400. That's tough. I don't mind starting off with a $200 to $300 risk, but I have a hard time when it hits 400. So it's got to be a very special setup. But the profit factor, well over 3. My win rate, about 60%, maybe a little less. And you can see the total winning is about 34,000. In reality, that would have been more, because as I increased this, the following year I would have actually been trading a $30,000, $40,000 account, and I would have had more money to trade with. But I just kept it as if it was 20,000 all the way. Risk management. Did I mention risk management and controlling your risk? I know I'm going to repeat this a lot. This is so crucial. It is so crucial. If you get a trade and you think, you know what, I can risk 5%, do it. You get knocked out. Hopefully you didn't lose 5%. You know, it's not up to me to say how you trade. I'm not even going to teach you how to trade. I'm going to teach you how to think when you go to backtest, to find your own system. That's the coolest thing to me. We can all sit here and ask a million questions. What does Tori do? What does Tori do? What does Tori do? And that is the base of my trading. My base of my trading is what Tori does. But I found things that fit my eyes, that fit me, that fits my job, fits my time, and I made it mine. Yeah, it's Tori's base, but it's my system now. I have my rules. I built this business. This business is mine. I didn't copy someone else's. I used someone else's base ideal and made mine out of that. And that's so neat knowing you've done that. Risk management. Did I talk about that yet? Told you I'm going to drill this one in. Now you're in a trade. You're at the break even. You've allowed your trade to mature a couple more candles. I don't know what you're trading, 15 minutes, 1 hour, 4 hour. Maybe you got a couple more candles and you see that trade's moving pretty good. Maybe you got a little pullback and you can go in with a tighter safety line. Now how do you trail that stop? Do you try to stay back behind every pullback, move it up the trail line once there's a pullback and it takes off again? You go up to the bottom of that pullback. Do you move by the next biggest candle, moves up, makes a new, makes a new higher or new lower? Do you go behind that candle? Do you stay, 100 ticks away, 120 ticks away? Some people trade by ticks. Some people have a tick goal for profit. They want to make 150 ticks. They want to make 200 ticks and take their little piece of the pie and be happy. But if your risk is 150 ticks or 200 ticks, how do you get to where maybe you close that in a little tighter before you capture your 150 ticks? How do you build up if you're trading? If you're trading a 5 minute and you're looking for 150 ticks, that could be like 7, 8, 9, 10 candles by the time you get there. What does that look like? Where, can you scale in? Can you add in the beginning? If it's going good, can you scale in a contract? Can you go in with 2 contracts and scale out of a contract at 250 ticks and then let the second one run? Get a few more, maybe not, but you can at least pull it to break even. These are the things you want to think about. You want to lock in your profits. If you're one who takes profit at the next support resistance level, when you get into the trade and you look at your risk, and your initial risk is $200, and the next support resistance level is only $150 away, do you take that trade? Because it might just turn around. Now you're risking more to make less. You could go on the hopes that it might break that support level. But we don't trade on hopes. We trade on technique. We trade on rules. What are the rules? I do that. If I'm taking a trade that's against the trend, my rule is to get out at the next support level or set dollar amount. So if I risk $200 to get into that trade and the next support level is at 150, I'm not taking that trade. It's not worth it to me. If that next support level is at $300, I'm going to be just above that. I'm going to take that at about 280, maybe 250. I risk 200, I make 250. I'm going against the trend. Yeah, I'm good with that. I got my piece of the pie. Those are the things we're talking about in risk management. Things you got to think about. Now, if I'm going to a support resistance level and I'm against the trend and I can go in with 2 contracts, so now I'm risking 400 because maybe it's a bigger risk. And the next support level would get me, 1.5 return on my I'll do that. But what I'll probably do is once I've gotten up to a certain point, I might scale out of one contract before it gets to that support resistance level. Lock in some profits. Because I'm going against the trend. I got to be careful. I got to assume that price is going to come back and take me. I've got to be ready to lose. Now, if I took $200 risk, I took a 1% risk, $200, and I lost $100. Did I lose? Or did I win? Because I conserved energy. My electric bill wasn't as high. I can almost take it as a win. It's a win. The market did not get my full 1%. The market didn't get my full 2%. I'm not giving the market the full amount. Taking profits, again, you need to know what that is for you. Is it a tick amount? Is it a support resistance level? Is it a dollar amount? I mean, you could be trading a 5-minute. You could say, my risk is 200. I take profit at 300. And this is what I'm going to do. I can do this consistently in this instrument at this time frame. If you can do that consistently in that instrument, in that time frame, and you're getting a good win rate, do it. It's your piece of the pie. Take it. Learn to scale into it. Learn to increase into it. Make it yours. I know many traders who will trade for 200 ticks. One lady, I watched a lot of her videos, support resistance trader. She trades gold only. She does 100 pips. I'm not sure what 100 pips is. I don't do Forex, but that's it. When she goes into a trade, she has 4 points or 3 points where she's adding, and she's got 3 points where she's scaling out. But she knows she can pretty much always guarantee at least 100 pips because she's done it so much. So she knows how to scale in, where to scale in, and she knows how to scale out as well. I watched one of her live trades up to 100 pips, and the thing actually went up on probably a good 250 pips total, but she got out at 100, $11,000. She's happy. I got my piece of the pie. I don't care. I don't care if it goes up. I got what I wanted. I got my 100 pips. So never think that because you have a dollar amount, a tick amount, or something like that, that you're not being a good trader. You are being a good trader. You're making rules that you see are consistent, and you're making it work. Let's go to a back testing session. We're doing still doing MES 2024 in the 1 hour. Life's pretty slow in here. We've only got 6 trades. We're up $383. I run this kind of with my back testing with my system, so let's see how all this works. Currently looking at a 2-point drop. I do want to add that for tags in stage 3, or I'm sorry, stage 4, you want to use the same ones. We had them for stage 3, but you're going to add some. You're going to add things like 2 contracts or 3 contracts or 4 contracts, or I scaled in, added a contract, because now we're more focused on money, right? Did you exit for a new play? Did the entry candle pull back? I still have that one. I like seeing that. Did you scale out? Where's your stop loss being put? By Tory's rules, the stop loss should be figured by the safety line. I would say 99% of my trades is by the safety line. That's what I want. It has been proven, absolutely proven in my back testing to be the best way to do a stop loss. My initial stop loss is by safety line. I try stop loss where I just get in and I try to put it behind the candle. Not very successful. Sometimes I do. I'll have a support resistance level, but not before my safety line. I'll do that. A little bit more successful, still risky. And those are the results I'm getting from tagging it. I'm tagging. That's the key, right? Tag it. You don't know. Get 50 to 60, 100 trades underneath it and find out how successful it is. Was I trailing my stop loss by candle and safety line? Was I trailing my stop loss? This one is not per my rules, so GTFO. Trade management by profit target. Do I have a profit target? Did I pick a support resistance level? Trade management by safety line. Am I using just the safety line? Am I just going to let this go until it hits a safety line and get out? That's one of the rules that are taught in Tory's trend line system. Try it, practice it, make it yours. How about safety line and a profit target? Let's say this was my safety line, but I had a profit target up here. Well, it had been out here. I didn't have to wait for it to drop back down. But if I got in here, I was safe. If I got in here, I got up and I was safe for this little sideways consolidation. Excuse me. Need a drink of water. These are the things you're thinking about when you're doing this. So make sure your tags are in for all this. It wouldn't even hurt. I separate it by, what was my stop loss method? Where did I put my stop loss, my initial risk? And then how did I manage the trade once I was in it? I have one where did I move the stop to the action line? I actually, out of that, I have a rule now that after three candles, if I got in here, after 3 candles, I need to have this. Let me get an action line here. If I got in here after 3 candles, I move my stop loss up to the bottom of that action line and allow it to move more. It's just something that I've back tested in the 4-hour and it's still going on in the 1 hour. And it's proven that after 3 or 4 candles, it does not come back below this line without it being a losing trade. By doing that, I've cut my risk almost in half most of the time or more, just by making that one move. So things to try. I don't know if it's going to work on your instruments or in your time frames. That I don't know. Once you have these tags in your system, they're part of your backtesting session in TradeZealot, and they're in your you can see them in your paper trade or your live trade results as well. This is why I color coded it. This is just for me teaching. I did use these. These were my actual ones. The red ones are for phases 1, 2, and 3. These are ones that I used in my phase, those phase 1 through 3. And this is what I use in my live trading. That's why you don't ever see me pulling these up. So if I was doing my live trading, I have a setup pattern. I required reversals and stuff that are things that I want to see for the setup. That doesn't mean I enter. It just means it's creating a good setup. I have my mistakes, which I never click. No. Too many clicks on those. And then I have basically my trade management, because trade management is just a major portion of trading. Getting into a trade, anybody can do that. Once you get into a trade to be profitable, that's where it gets tricky. All right, let's see what we got here. We got 1, 2 touch point. We're getting ready to break the line. I don't see a support resistance level here because we're up at near all-time high. I can't get in it, even though that's a pretty good, I like that little signal for coming down. I could take this line here. Let me kill that guy. I don't know why he's there. Don't know why he's there. Here we go. So in a 1 hour time frame, I would definitely take this if this is a, we're going to go ahead and set a stop order. See if this will work for me. I would get in here. If we get a retest and this starts, kind of goes up a little bit and then pulls down, that's a $98 risk. Okay. I can do 1%. This is going to probably be, this is MES, so I know automatically anything down short is against the trend. So if it's against the trend, I want to know if this is not a support line. Not sure why we have that here. Let's go down here and let's kill this guy. So this says I can make 186 bucks. So let's make this 2. That's worth it to me. So now I can make 372 bucks down to this support line, and I'm risking $200. That's risk management. That tells me I can get in. Now, I'm going to wait for this to get to this point because I want to see it clear this last candle right here. So I'm probably right at the tip, maybe just a fuzz past it. So now I'm 205. 1%. My stop is behind the safety line, which is absolutely perfect for me. I love that. So if this ends up bouncing off of this trend, this action line, and coming down, we're in a trade. Now we're in. I'm already going to move my stop down This is the safety line, but I'm moving it down to this candle right here. I don't see good movement, so I'm out. So out of that $200, the market got $140. Didn't quite clear this, but I don't see positive. I don't see this moving in a positive direction, and I don't care. It's done. Market got 140 bucks. This is a neat little trick on the session notes. You can post your type in your trading playbooks and refer to it, stop, pause, take a look at this. In your trade notes, click on your trade note, the trade you just took. I need to add my entry. It was right here. Entry. Stop loss. And I put my exit right here. So I got hit there. Exit. Oops. I'll kill that. I like to get a picture snapshot of as much as I can. And type in now there's a slight chance that I could have missed a trade. 11:30. There's a good chance I could have missed a trade. What did we have? We had a 2 touch point trend line break. I had a retest after the break at low risk. No support resistance. The candle that I entered on was a full candle. I had a clear reversal up here where it rejected that upper trend line. I'm against the trend. I had to exit at a defined point, and I was going to trail there, and I moved my stop loss within 3 candles to the action line. So then here I went in with 2 contracts. Moved to action to stop. My stop loss was at the safety, behind the safety line, and I was going to trail candle and take profit. And if you want, you can continue adding these. If you don't quite have your whole system figured out, this was all basically based off of more intricate rules in understanding of your pattern, all the things that you did in phase 1, 2, and 3. So this is what I got. We can take that. I can delete those lines. I now have a picture to go back and review. When I'm all done, I can review my losses. I can review my wins. I can see what I did. I can see what I was thinking, and make further adjustments in my trading. So here we are, 1, 2, 3 touch point. Barely got enough. I like 30 candles. That's pretty close to 30. We'll see what happens. It's a little late in the day, so for me, this is noon. And then if I just finished a trade and it's noon, I'm probably not going to enter another trade. Look at that. It turned around and came back. And that's why I say, if you got to try everything. You have to try everything. If I would have kept that behind my safety line, I'd still be risking $200, assuming that this was going to turn around at that safety line. And a lot of times it will. The safety lines are amazingly accurate at keeping that price down. So don't throw that idea away. And anything you see me do, make sure you back test it before you trade it. Back test everything. There's nothing wrong with taking advice from somebody, asking somebody, hey, what do you do about this? If it sounds good and you think it sounds great, back test it. Make sure it works for you. Because if you don't back test it, you're just gambling. And if you're gambling, you're going to struggle in this business. All right, we're at the end of my day, so I'm going to just jump to the next morning. What happened? I've never gotten this before. Oh, okay. I don't know what it was. So it jumps to the next day. It's still moving down. Let's readjust things and take that out. I want to trade one more because I have a feeling this is about ready to break up. We've been running awfully tight to this trend line up here. I'm creating a long bias by watching this. But then again, it could always try to get itself back down to this support level. All right, we're at 12:30. We'll see what happens. Yeah, that's going to be a short. I was wrong. See, I had a long bias. So if I get in here, I want to get in underneath this last low. I'm at 2 contracts, $170. That's well worth the risk. And if I take profit here, I will make 175. So let's go with that. That's a low risk, very low risk trade with a good profit potential. See what happens. Here's one that's fun to do. This is a good back testing thing. It's at the end of the night. Now, my question is, do I want to leave this? Am I thinking it might still go up? I'm not going to sit here and watch this trade anymore. It's 6 o'clock at night for me. I think I'm going to go to just go and spend time with the wife. But I still feel like it might go down. And if it doesn't go down, it ain't going to hurt me. So I'm just going to go ahead and skip to the next day, leaving this trade in place. This means I could get hit over while I'm not watching the charts. And I didn't. So I wake up in the morning, I didn't get hit, I kill that trade, I'm done. Readjust my lines. do a little scan here. I think we're going into sideways trend. I think we got gel going on here. Oh yeah, we do. Call that gel. I'm going to say we're in gel from the all-time high to this point here. That's all I got for today. That's a little bit in the live action. That's part of what I hope you got an understanding of just the variables that you can trade, the variables that you can play with and experiment with on creating your trade management so that you don't get knocked out. And if you do get knocked out, are you okay with that? Because it can open up another potential trade right after or whatever. These are the things you got to think about. But the biggest thing I want you to get out of phase 4 is risk management. If you're risking 1 to 2%, do not try to get it so you're not giving the market 1 to 2%. Here was the bonus I was going to give you guys. A little dive into my trading. We're going to go to a date range of last week. Last week I had 6 trades. This month was absolutely the worst. I took a break even. This is one trade. This was me getting out, having $600 locked in profit. Put my trade at break even because I was wanting it to go higher. It didn't. I got out break even. So this is a combination of one trade, 2 contracts. So break even trade, $171 loss, $105 loss. Kind of went on tilt here at 3 trades in a row at a 69, a 97, and this was the worst. 285. Like that absolutely kills me. To give the market more than 1%. It just absolutely, oh my gosh, I was, Friday, I was devastated. Came in Monday, in and out, only gave the market $100. Actually didn't want that. Back. Took 3 trades and lost 110, 130, and 15. And then 130. This guy right here was the best trade for me this month. And this is going to sound odd. It was a loser that should have made a lot of money. And the reason it was the best trade for me is I realized how much I was in tilt, how much I was sliding off. I was trading my rules, getting in per my rules. I was doing good at risk management, minus the 1 tilt trade on the Friday prior. But this trade here, I reversed twice. I panicked at every candle on the 1 hour. And then I just moved my stop up tight and got knocked out for a minus 30, which should have actually been at least a $50 win. But that whole trade brought my anxiety up. I had the physical feeling of what the heck am I doing? I am not in control. I am not trading per my rules. I have not been trading per my rules. I'm not in control. My emotions took over. My anxiety, my fear, my trying to make up the money because I'm down 900 by this, after this day, I was down $900. $940 for the month. 10 losing trades. 10 losing trades total, 2 break-evens, and 2 wins. I was down $940. I took 1 trade on Friday. I calmed myself. I made sure it was good. It was a 3 touch point break. Great double top reversal. And I took the trade. Because it was against the trend, I set my target profit. I got $500. This is trade management at its best. This is risk management. I don't want to say at its best. At its best for me. I have $940 in losses in 10 trades. 1 trade made back more than half of that. That's what risk management does for you. Risk management can't help you with the emotional fiasco you might go through with a bunch of losses. But 10 losses in 1 trade, I wiped out over half of it. Had every one of these, I gave 1%, my 1% risk. If I gave the market that 1%, I'd win $2,000. That $500 win would be nothing. I'd probably still be in tilt. I'd probably still be fighting my emotions because I'd still be down $1,500. This is the benefit of risk management. I wanted you to see that in real life. My risk average for this month was 112. My profit average, I'm at 308 and I got a 16% win rate. It's a crappy month. One more good trade, it's a break-even month. After all this crappy, I could possibly break even. I might also lose. Last month I had 3 losing trades that equaled about $300 and some. I had 1 trade that wiped it out. 1 winning trade. I'm just trying to drill this in. I really want you to know that there's not a single trading guru out there that won't tell you risk management's the key. I just learned that basically after 2 years of trading, 2.5 years of trading. I learned that about 3 months ago. I clicked 3 months ago, 3 or 4 months ago. I back tested and found my system. I formulated it and I'm working it. That's all I got.